Entrepreneurial finance is one of the most critical aspects of launching and sustaining a business. Without proper financial management, even the most innovative business ideas can fail. Entrepreneurs must navigate a complex financial landscape, balancing cash flow, seeking investment, and avoiding costly mistakes. This episode explores the financial challenges faced by new entrepreneurs, the pros and cons of bootstrapping versus external funding, and common financial pitfalls to avoid. Hey, it's another enlightening episode of the Abraham's Ideas podcast where we explore strategies and insight to empower you in your personal and professional endeavors. I'm your host, Abraham Mas. To our new listeners joining us for the first time, I say big welcome to you all. This is Abraham's Ideas podcast. Don't forget to subscribe and hit the notification bell so you don't miss out on our new episode. Let's discuss financial challenges faced by new entrepreneurs. Starting a business presents several financial hurdles that entrepreneurs must overcome. Some of the most common challenges include, number one, limited access to capital. Most new entrepreneurs struggle to secure the financial resources to launch their business. Traditional banks often hesitate to lend money to startups due to high risks of failure and lack of credit history. For example, a tech startup developing an innovative app may struggle to get a loan because it lacks collateral and a proven revenue model. Number two, cash flow management. Managing cash flow is critical to business survival. Entrepreneurs must ensure they have enough money to cover expenses while waiting for revenue to materialize. For example, a retail store that purchases inventory upfront may experience cash flow shortages if customers delay payments or sales slow down unexpectedly. Number three, high operating cost. New businesses often underestimate their expenses. Rent, salaries, marketing, and inventory costs can quickly deplete capital. For example, a restaurant owner might miscalculate the cost of supplies, leading to unexpected shortfalls that impact daily operations. Number four, difficulty in pricing products or services. Finding the right price strategy is crucial. Price too high and the customers may look elsewhere. Price too low and the business might struggle to cover costs. For example, a freelance graphic designer charging too little might struggle to sustain their business despite the steady flow of clients. Number five, unexpected expenses. Entrepreneurs frequently face unexpected costs such as equipment breakdowns, legal fees, or regulatory compliance issues. For example, a small manufacturing business may face sudden machinery repairs, straining its budget and delaying production. Let's discuss bootstrapping versus seeking external funding. Entrepreneurs must decide whether to finance their business internally, which is bootstrapping, or seek external funding. Each approach has advantages and disadvantages. Let's talk about bootstrapping, self-financing a business. Bootstrapping involves funding a business using personal savings, revenue reinvestment, or financial support from friends and family. What are the advantages? It gives you full control over business decisions, no debt or equity dilution. It forces financial discipline also. What are the disadvantages? It limits growth potential due to restricted funds, also personal financial risks, and slower scaling. Let's talk about seeking external funding. External funding options include bank loans, angel investors, venture capital, and crowdfunding. Let's cover the options. Bank loans. Traditional loans provide structured repayment plans but require collateral and credit worthiness. Number two, angel investors. These are wealthy individuals who invest in startups in exchange for equity. Number three, venture capital, which many know as VCs. VC firms invest large amounts in high-growth startups in exchange for equity and decision-making influence. And lastly, we have crowdfunding. This is raising funds from large number of individuals via online platforms. Now, lastly, let's talk about financial mistakes to avoid in the early stages. Many startups fail due to poor financial decisions, and here are some common mistakes to avoid. Number one, underestimating startup cost. Entrepreneurs often miscalculate the capital needed to reach profitability. leading to premature shutdowns. What is the solution? Create a detailed financial plan with a buffer for unexpected expenses. Number 2, mixing personal and business finances. Failing to separate finances can lead to accounting issues and tax complications. The solution to this is to open a dedicated business bank account and maintain clear records. Number 3, over-reliance on debt. Borrowing too much without a solid repayment strategy can cripple a business. The solution to this is to balance funding sources and focus on generating revenue before taking large loans. Number 4, ignoring financial metrics. Failure to track key metrics like burn rate, profit margins, and customer acquisition cost can lead to financial mismanagement. The solution to this is to regularly review financial statements and adjust strategies accordingly. Number 5, scaling too quickly. Expanding too fast without a stable financial foundation can lead to collapse. For example, a small e-commerce business hires too many employees before securing consistent sales. It can lead to cash flow problems. Lastly, neglecting taxes and legal compliance. Ignoring tax obligations and legal requirements can result in hefty fines. The solution to this is to work with an accountant and ensure compliance with local regulations. In conclusion, entrepreneurial finance is a crucial component of business success. New entrepreneurs must navigate funding challenges, decide between bootstrapping and external funding, and avoid common financial mistakes. By planning ahead, managing cash flow effectively, and making informed financial decisions, entrepreneurs can increase their chances of long-term success. This will be the end of today's episode. If you haven't subscribed, remember to do so by hitting the follow button on Spotify, and I'll see you in the next episode.